Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin. Got some good news. CPI data is a little bit higher than expected. It's providing us with a very decent market here today. Conditions are looking overall favorable. So we're going to talk about that. A couple of other key factors I think are extremely important to recognize too. We're going to talk a little bit about net longs versus net shorts and how that's changing. And then also discuss a little bit previously about our anticipation for today's market. In other words, what happened and why we are here today. Okay, again, now a lot of it had to do with CPI data, but also key level supports I describe here. 28,000 is the resistance zone at 27.28. Keep that in mind. We got some simple moving averages, some larger time frame moving averages. Going to provide some resistance when we get there. I think we're going to trend towards that, but between now and then, if you had taken heed to my entries there, I got a lot of good feedback there this morning. Thank you so much for communication there. A decent long entry was estimated to be 25,800, and we actually got that bounce off that level here just yesterday. Okay, so it's been perfect. It's actually working the way that it's supposed to, and that's how trading is supposed to happen, minus all the manipulation and the crazy stuff that occurs. For the most part, when you get key level supports and resistances, that's how you're supposed to see these changes and these adjustments occur. That's where we're at right now. Anyway, so just kind of want to preface that. If you're new to the channel, though, not a financial advisor, love to teach people to trade. I hope you can learn something today. You want to become a better trader, come on over to our Crypto Cash Discord. We have tons of educational content here. Same thing with our Twitter and our Telegram, too, of course. We got a lot of different content here that's very important to note, but Discord's kind of nice because it has everything all in one place. And we got some awesome trades coming over here. Again, we got some Bluezell, 42%, Solana, 21. That was a couple days ago, of course. We're waiting for those trades to continue. They're both really close to our second profit target, so congrats to our community members. And by the way, we're going to have some more signals here today and tomorrow, leading throughout the rest of the week, just based on us, surviving CPI data and kind of seeing where that comes out. Because we typically like to not trade in that time frames. While my Premium Plus group, we took a couple of stop losses there, really small trades. Minus that, we're pretty good. And those were just automated trades. So again, something it kind of happened overnight when I was sleeping, but regardless, those things do occur, right? So the key is to minimize your loss, maximize your gains. And if you're taking losses here and there, it's completely normal. Just so you know, I know it sounds weird to normalize losing, but if you normalize losing less and normalize winning more, it's a better strategy, right? And those are all things I like to teach. So be sure to check that out in our trading academy. So here's the thing with Bitcoin. Let's jump on into the nitty gritty. So on the daily, first of all, let's go ahead and remove this little guy here, this little bouncer there, because we did get that bounce off 25,800. We were looking for a closure above 25,800, 26,000 even. We got that. The price legged up right there. Okay, so perfect stuff in that regard. While it's never perfect, I guess that's probably a poor description. It worked out kind of the way that we're expecting. And it's nice to kind of see that happen for a change, right? Because the market's actually moving the way that it should instead of complete opposite of everything you'd expect. That said, we take a look here at the RSI. We bounced off 30 on the RSI pretty soundly. We've got also a MACD convergence as well. And then, overall the data is looking pretty good, but take heed, we do still have a resistance here at about 27,500 / 28 for the most recent high. And if you take a quick look, of course, here at liquidity levels, we can see there's lower liquidity and higher liquidity levels, but we're kind of in between that, if you will. But there is, of course, a fair value gap right here that's pretty stark and obvious. Let's go ahead and pull that up for you. It's looking right here at this level. A little easier to see when I zoom in. So roughly this most recent fair value gap based on daily puts us at 27,000 even. So just say we come up here to fill this level, there's a decent chance we might get rejected there initially, or just potentially break right through. It depends on the liquidation levels. We'll look at that here in a minute with high block capital. But the bottom line here is that's roughly what we're looking at here on the daily for this coin. Now, again, Bitcoin's looking pretty strong on the daily here so far, right? Now, keep in mind, though, we are coming up against 50 on the RSI. We got some resistance levels here. 0.5 in Fibonacci, very common retracement level at 26,300. So closing today above 26.3, I think is a very important thing, right? I think it's important for us to identify that is a key level resistance based on most recent highs, but also Fibonacci retracement levels. Never forget to draw out some fibs, by the way, guys. It's really helps, guys and gals, again, to help understand that. And just so you understand how I do the fibs, they're basically just from this most recent low to the most recent high. That's really all it is, okay? So just keep that in mind. It's simple as that. We could draw out some most recent lows to the most recent high to the most recent low here. Gives us pretty similar patterns here, but for the most part, I like to take slightly larger time frames so we can identify more key level support and resistances based on larger movements. Once again, that's kind of where we're at there. Okay, so 4 hour. You know what? Before we jump into the 4 hour, let's talk about this here because I think this is important to recognize too. So when we look at the actual charts, we can see a significant amount of increased volume here today versus yesterday. Okay, so that's very important. Increased volume, increased price implies that the price action should and could stay in that time frame. Now, keep this in mind. If you look at previous time frames, there are situations where the price increased significantly with extra volume, and it died off a couple days later. So I'm not saying that tomorrow we're just going to see an instant, drop. I can tell you right now at this level, we're in a position where it's likely going to be okay. In fact, let me go ahead and refresh this here because it does look like the candle hasn't fully updated yet. Sometimes with high buck capital, things are slightly dated, or there we go. We just got to kind of get that refresh in there so we can kind of see with this candle here, stick here, today's trading day is halfway over, and we've got roughly half amount of volume as yesterday. That's pretty good. That's exactly what we're looking for. It does imply that we have increased volume here today so far based on that sentiment. Now let's go ahead and talk a little bit about, let's go ahead and close this guy out here. And what I want to show you is the net longs versus net shorts. And this is important. This is aggregated across multiple exchanges. Okay. So what this basically does is tells us the cumulative amount of longs in the market versus that of shorts. Now shorts are still heavier than longs right now because that's the overall bias, right? We understood that the price action is coming down. We're making lower lows, lower highs in larger time frames, and we still haven't broken bullish yet. Okay, so try not to let today's market fool you and think that we're all good, right? But there is some good here in a sense, whereas we can see the shorts starting to lower the amount of overall positions, and longs are starting to get a little bit higher. Keep in mind, a little bit is the emphasis there, because you can see here before we had this massive drop off recently, back in August, of course, where the price gapped down, 10, 11, 12%, somewhere in that range in like 5 minutes or less. Massive sell-off with all the crazy real estate stuff there. The bottom line is we still, even at that point, had less longs than shorts in the market. Okay, so keep in mind, we're not by any stretch back on track, but you can see now there's less shorts in the market than there was even leading into that event. Okay. So just keep that in mind. Some really cool stuff in that sense, kind of a shift in momentum, if you will. We'll look at some trend lines here in a minute and see. I don't think we've broken through the major trend line, but I do feel like we are trending positively here nonetheless, okay? Again, it's going to take a few more days, a few more weeks of this kind of behavior to be able to really sustain itself, but this is a great start. CPI being positive, I think we're going to be in good shape as long as inflation doesn't screw us here in the near future. All right, so that being said, take a look at Fear and Greed Index. Just to touch on this, we gapped up here, so to speak, and we're getting closer to that intermediate fear level, if you will. So a little less fear. People aren't running around with sticks and stones. They're kind of just really averaging out and being like, oh, okay, this is kind of normal, right? And that's what happens. That's what RSI actually tells us too. It's that relative strength of oversold versus overbought. Is this an extreme or an unextreme situation? And people are starting to kind of get used to this price point, and in turn, the price coming up, it's a very positive inflection. Okay, so let's go ahead and discuss here just briefly the situation here with open interest, and we'll go ahead and summarize and call it a day. So when we look at open interest, this is a net longs, right? So we got some longs here. Majority of longs are hedged right there at 26,200. It's currently right where the price action's at. And that makes sense because that broke through this key level resistance here at about 26,000, 26,100, and came down to effectively consolidate as a support level. So as the price averages itself out above that key level resistance, the amount of longs start entering the market. It makes perfect sense. That's kind of how it should be. So you want to wait for confirmation in a lot of cases. We can also see the same scenario too, though, where a lot of shorts are interested at that 26,200 mark, thinking that's going to be the high. They think that likely because of the fact that that is the top end of this most recent range. Okay, so keep that in mind. That's a pretty safe anticipation, but I personally don't feel like we're going to see a dead cat right now or the price action drop significantly. It could be a trap, but it seems less likely. Speaking of traps, let's go ahead and see and identify where the most amount of liquidations are. So this is the last 7 days. Let's go ahead and go with a 1 month, and we'll add a couple of exchanges here as well, and kind of see what the aggregate amount of liquidation is based on this larger time frame. So looking here in the overall sense now, we talked about this previously, 23,500 is a pretty strong liquidation area. Okay, so if we do somehow wick down there, we could even see a dip all the way down to that 20,500 mark to fill that gap for the CME gap from months ago. That's a possibility. But bottom line here is most of the liquidation has occurred already at 25,000. That's where the most amount of liquidations occurred recently. We have a significant gap here, of course. We got 26,700. That's the most recent, you could say, liquidation area. So the price does wick up to 26.7. We're going to see 27 or 28,000 shortly after, mainly because the price is going to blast off through that level with a lot of shorts getting liquidated. So this is like a secondary amount of shorts. But primarily, if we look at a long-term picture, 28.5 is the next key level resistance. So keep in mind, these two areas, 23.5, 28.5, we're averaging out almost right smack dab in the middle. It makes perfect sense. That's exactly how it works with liquidation. So the truth is here, we want to look at more recent liquidation levels to give us a little bit better of an approximate. And this tells us kind of more effectively here that if we look at the most recent time frame, 26,700 is going to be a massive short squeeze. And of course, it would be the inverse if we dip down to 24,800. Okay, so 24.8 to 26.7. That's essentially the range that we're in right now. But we're testing that closer range, so a lot of shorts are getting scared. They're going to get liquidated here soon, so they're probably using a lot of leverage. My guess is those are 20 to 50x leverages, and they're going to get hit pretty hard if the price wakes up there because they're hedged pretty heavy at 26.2. Those are interesting things to note. What does that mean in the big picture? Well, it just implies that if we continue to break through this level, which it looks like we're trying to do, so we got somewhat of a pattern here forming. This is not the cutest cup and handle, but it is the bottom line is that we're seeing a retest of this range multiple times. And now that we're breaking through that level, we should be able to use that as a new support. So my speculation is that we can close about 26,300 today. We should see a continuation of the upside. That would make a lot more sense, okay? Again, just some logical thought processes here, right? Is it 100% foolproof? Never. Trading is never 100%. But if you can, trade 60, 70, 80% probability, then you're in pretty good shape. I mean, last month we averaged about 90% with our swing trades, and that was a pretty cool situation. Again, you can kind of see that on our Twitter here if you're curious, just to see the trades that we took last month. Got some pretty awesome trades. We're pretty much, 9 out of 10 so far this month. But once again, we got to be patient. You got to recognize that sometimes CPI data and little factors are important to wait for. Okay. All right. So to summarize here, the 4-hour time frame is still looking bullish. We're above 50 on the RSI. We can see with our simple moving averages, we are trending closer to the 200. This is another rejection potential point. 26,700. What do you know? 26.7 is a key level resistance for those liquidation levels we saw earlier for shorts. Okay. The main reason why is because they typically put their position, their stop loss, just above a key level of resistance. What do you know? 26,700 is a Fibonacci level, 0.382. Okay, so that's exactly what I would do. I mean, in most cases, if I had a short open right now, I'd put it just above the most recent resistance, which in this case is 26,700. Now, I don't use that much leverage. Typically, I'd have a larger smaller position with a higher stop loss. With lower leverage, effectively the same thing. But I just like to kind of survive the market. I don't like to keep jumping in and keep getting liquidated. That's not my thing. While it has happened a few times, you can probably see this on my BingX account. Totally happens. Very realistic thing. You still got to recognize lower leverage, lower position size gives you much better choices in the game or more survivability. Okay, that's what we got to do right now. It's all about survival in this kind of market. We can't just throw a bunch of longs in there and expect to get our targets. Okay, so 4-hour time frame, mostly good. Just keep in mind 26.7 is the most recent resistance. Also bear in mind too, my Twitter, Telegram, and Discord, I'm going to send out some playout charts here for this coin, and that will definitely be included there with that being a key level resistance. Last but not least is the hourly. This should be fairly bullish because if we take a look at our TD sequential, we got a nice little reset here. We're not overextended by any stretch. In Ichimoku cloud, we have been above the cloud, but we're maintaining ourselves above the actual cloud itself, that moving average. And it's starting to work its way up to average itself out at 26.2. So I think 26.2 should prove as a pretty nice solid support. Once again, we got to break through this little resistance here at about 26.3 though. So if we get a solid closure about 26.3 today, I think that would be very helpful. And I think that it's more likely to see that short squeeze liquidation right around 26.7 and the price shoot up to 27.28. So I'm leaning a little bit more towards 28,000 range first before we see a pullback if we were to. But generally speaking, at this level, I think Bitcoin's looking pretty strong. There's no reason to kind of bet against it for the moment because most of this technical analysis is kind of telling us it wants to continue upwards. Okay. So again, mostly positive stuff here. I hope that made sense. I know it's a longer video here today. I apologize for that. Thanks again for watching if you watched all the way through. I think you're wise because it's important to look at everything and not just the bumper sticker versions because I know time is important. But if you really want to learn how to do these things, you got to kind of pay attention to the nuances. And those little things I think do help. So kudos to you if you did. If you fast forward to the end, shame on you because you missed a lot of good stuff. All right, I hope you have a good rest of your day. Thanks again. We'll see you in the next one. Take good care. Later.